As we bounce off the April low of 74K, optimism is back. Bitcoin is now approaching the 100K mark, but many are still unsure whether to sell in May and step aside. Even though the worst appears to be behind us, it's crucial to stay cautious when markets move this fast. While the charts may look strong, the real story is playing out under the surface. In this video, we're not just chasing short-term hype. We'll focus on the bigger picture, breaking down the macro landscape, the Fed's likely next steps, and what it all means for crypto in 2025 and 2026. This isn't about being a permabull or stuck on one idea. The goal here is to stay rational and time the cycle with clarity. If you find this breakdown useful, help spread it by sharing the video. It really helps the channel grow. Drop a like, leave a comment, and show some love if you want more content like this. Alright, let's dive in. The Q1 2025 US GDP numbers came out on April 30. They were expected to be bad, but the actual figures were worse than most estimates. GDP came in at -0.3%, while expectations were around 0.4%. This is the first negative print since Q1 2022. The main contributors were higher imports and lower government spending. But there's more. The PCE index rose by 2.3% year-on-year, and the GDP price index jumped to 3.7%, its highest level since August 2023. In simple terms, inflation is rising while the economy is slowing down. That's stagflation, something we've discussed before, and it's arguably the worst economic setup for any central bank to deal with. Let's unpack why that's so dangerous. The Fed usually has two tools, interest rates and liquidity. In a slowdown, they cut rates and inject money to boost spending. When inflation is high, they do the opposite, tighten policy and raise rates to reduce demand. But stagflation corners them. If they stimulate, inflation gets worse. If they tighten, growth slows even more. It becomes a lose-lose situation for the economy. Jerome Powell once laughed it off, saying there was neither stag nor inflation. That doesn't seem to be the case anymore. So what can the Fed do from here? Let's first look at the likely path they'll take, and then we'll talk about how that affects crypto in 2025 and 2026. Toward the end, I'll show you how I'm preparing my portfolio for all scenarios, so stick around. After the latest GDP release, one thing is clear. The Fed won't be able to sit still much longer. The Q1 data doesn't even reflect the full impact of tariffs yet, so Q2 could come in even weaker. Inflation is already down from last year, and trueflation is currently at 1.45%. That will increase pressure on the Fed to cut rates and possibly start injecting liquidity again. According to the FedWatch tool, the chances of a cut in May or June are very low. July is where the odds start picking up, with a cut probability just over 50%. The next Fed meeting is on May 7, and it's going to be critical as always. Even though the Fed has been cautious about easing, the slowdown may leave them with no real choice. Also keep in mind, GDP numbers can be revised upward later, like they were in 2022. But even with that possibility, the Fed is expected to pivot in the coming months. We could even see the end of quantitative tightening by Q4. Now, all this might sound amazing for markets and for crypto, but it's not that simple. So is this ultra bullish for Bitcoin and altcoins? In the short to mid-term, yes. Bad economic data often fuels market optimism because it raises expectations of Fed support. That's why both US stocks and crypto rallied after the GDP print. Markets are betting on looser policy. The US also knows it can't let tariffs drag on for too long. If they do, recession risks go up globally. Negotiations are already happening in the background. Investors see this and they're front-running a potential recovery. On top of that, they're pricing in Fed easing later this year. All of this has led to a quick bounce. Liquidity is already trending upward, and Q4 2025 is looking like a strong candidate for a bullish breakout. As I've mentioned before, the traditional 4-year cycle seems to be shifting. We might now be in a lengthening cycle, with a possible top in Q4 2025 or even Q1 2026. So what's my outlook for 2025 and how am I preparing? I think global liquidity will continue to rise, and risk assets usually follow that trend. The Fed is likely to cut rates in July, with QT pausing shortly after. I expect purchasing managers' index to rise in Q4, and that could send alts into parabolic mode. Right now, I'm mainly focused on building positions in quality large and mid caps. I'm not rushing into low caps just yet. I'm cautiously bullish for alt season in the second half of 2025. This May doesn't feel like your usual sell in May and go away setup. Many assets have already been consolidating for months and still look relatively undervalued. Over the next few weeks, I'll be rebalancing some positions and adding to coins that showed resilience during the earlier drawdown. I'll share all the updates in the portfolio channel on Discord, so keep an eye out there. Now let's talk about the worst-case scenario and why it's important to be prepared. As loose monetary policy returns and global liquidity floods the system, inflation is likely to pick up again. When too much liquidity enters the market, demand often rises faster than supply. That leads to price hikes across basic goods and services. Inflation erodes household savings, weakens purchasing power, and forces central banks into a tough spot. If they act too late, inflation gets worse. If they react too quickly, the economy could crash. This creates instability, falling real wages, and rising pressure on governments. This won't happen immediately. Most of the serious inflation risks will show up in the second half of 2026, but markets will likely peak well before that. That's why it's critical to begin scaling out of high-risk altcoins ahead of time. By the end of 2025, I'll be mostly positioned in Bitcoin and a few large caps. And if we see a blow-off top like in previous cycles, I'll probably be fully out by then. That said, I'm not disappearing. I'll keep posting regular updates, breaking things down in real time and staying transparent with both the wins and the setbacks. So make sure you're following us on all socials and staying plugged in. What do you think? Will the cycle peak in September or stretch into 2026? Drop a comment and let me know your take. Thanks for watching. I'll catch you in the next one.